Most people overpay on taxes because they fail to write off everyday expenses that they are already paying for, but simply do not write off, only resulting in them reporting more of their income to the government and paying higher amounts of taxes as a result. So today I want to show you how you can write off everyday expenses like portions of your home expenses, car expenses, meals, medical expenses, and even your kids, for crying out loud, and so much more. If you name the expense, I can probably show you how to write it off using the tax code legally and ethically. Believe it or not, you can find the rules to write off most of these types of things right on the IRS's website or in the tax code itself, but most people were never taught this, and to be fair, there is some nuance to these rules. So today, as a licensed CPA that helps people with this every day at mycpacoach.com, today I'm going to walk you through the top everyday expenses most people already have and show you how to write them off by leveraging the tax code. So let's jump right in. Okay, so most people pay taxes on their income first and use what is left to pay for all of their expenses. For example, if I go out and earn $10 of income, Uncle Sam might take 30% of it, or $3, and now I have to use the remaining $7 to pay for the rest of my expenses. This is how most people function. However, the wealthy use a trick to flip this entire scenario. They deduct their expenses first and only pay taxes on what is left after paying for their expenses. So let's say we had the same $10 of income, but we wrote off $7 of expenses first, leaving us with $3 in taxable income. So with the same tax rate of 30%, now all of a sudden Uncle Sam is only left with $1 in taxes in this scenario. So how exactly is this possible? Well, it starts with understanding Section 162 of the Internal Revenue Code, which states that any taxpayer is allowed to deduct all ordinary and necessary expenses paid or incurred to carry on any trade or business. Which means if you have a trade, a side gig even, or even an actual business, you can write off any expense you incur to operate that trade or business if it meets this simple criteria. So the trick to making this work is that you have to earn income that is classified as trade or business income under IRS rules. And that does not mean that you have to have a formal LLC or a storefront, okay? You can qualify as a business by earning almost any type of non-employment income. I have clients that qualify for this through a side gig, a 1099 contract they may have, day trading, owning rental properties, earning affiliate income, doing DoorDash, and in so many other ways. But the bottom line is that you must operate some form of trade or business to take these deductions. That's step number one. Step number two is understanding the rules and criteria to actually write off your everyday expenses without breaking the rules. So let's walk through some of the most common everyday expenses that most people have and also walk through how you can go about writing them off. Starting with number one, your housing expenses. So let's say you rent or own your home and you want to write off all of your housing expenses through your trade or business. And the question here is, well, is this actually possible? Well, let's take a look at the tax rules. The IRS allows you to deduct expenses tied to the business use of your home that is exclusively used on a regular basis to conduct your trade or business. So if you have space in your home, like a room that you can turn into an office, or a basement or garage you can use to store products or use to work on your business, then you can write off a portion of all of your home expenses under your business with the home office deduction. And not only can you write off a portion of your rent or your mortgage, but you can also write off portions of your utilities, your Wi-Fi, and even maintenance expenses you incur to keep the entire home up and running. For example, let's say it costs you $50,000 a year to maintain your home, and your business uses 10% of the home exclusively. Well, in that case, you may be able to take 10% of those expenses as a write-off, or in other words, receive a $5,000 deduction on your taxes. And if your business uses more space in your home, like 20%, then you would get an even larger deduction. And as your home expenses increase as well for the entire home, so does your deduction. And this is just one example, but there is far more you can do with your home to reduce your taxes when you own a business. For instance, you could rent it to your business under the Augusta rule, or convert the entire property into business property or rental property to benefit from large deductions like depreciation. Just comment home to learn more about this, but for now, let's move on to a very hot topic right now, especially with the new tax rules, which is the ability to write off your car. The tax law is very clear that if you use your car for a business purpose, then you can deduct it on your taxes. And when you use your car more than 50% of the time for your business, it can also qualify for 100% expensing under the new bonus depreciation rules. But for most people, writing off any portion of your vehicle starts with having a valid business purpose for it in the first place, which is the key to make any of this work. There must be a legitimate use case for how you're using this vehicle for your exact type of business, and it needs to make sense, whether it involves using it to deliver products or services, meet with business contacts, or to travel to various business locations. So you have to solve for that first. And once that is solved, you will be able to write off portions of your actual car expenses, including depreciation using IRS rules, or you can elect to receive a fixed write-off for each business mile that you drive. I already have a separate video guide on this, so just comment vehicles if you want me to send it to you. But for now, let's move on to another major topic, meals. So believe it or not, if you dine out or have a meal catered to you, you may be able to write off that meal if it meets IRS criteria for being a business meal. And the criteria is very simple. In order for a meal to be tax deductible, there must be a business purpose for the meal, like discussing a topic that may be in the interest of your business, and a business contact present, like an employee, business partner, client, or prospective client, for example. And what's cool about this is that that business contact can even be a close friend of yours or a family member if they are affiliated with your business, which we have seen clients do to increase their deductions here legitimately. Likewise, there may also be ways for you to turn your vacations into tax deductible expenses under the right set of circumstances, which involves turning it into legitimate business travel under IRS rules. Now, you probably understand the theme by now. There needs to be a legitimate business purpose for the travel in order for it to be tax deductible for you. Maybe you are attending a business event, filming content related to your business, looking at business or investment property, or holding your annual board meeting where you strategize for the years ahead. But whatever it is, it has to be in the pursuit of increasing your business income. If it is, then the tax law allows you to write off things like your airfare, lodging, transportation expenses, and other travel-related expenses on your taxes, which further lowers your taxable income and reduces your taxes. I also have an in-depth video on this as well, so just comment travel to learn more. Now let's move on to the next major expense that most people have, and is actually the #1 causes of bankruptcies in the United States, medical expenses. Now, truthfully, medical expenses are tax deductible without having a trade or business, but only if one, you itemize, which most people don't do, and two, those medical expenses exceed 7.5% of your income, which means any expenses that you have below that level would not be tax deductible. And those challenges cause most people to miss out on writing off any of their medical expenses. But here's the good news. When your business is structured in a certain way, you are able to set up a benefit arrangement through your business that allows you to write off expenses like these dollar for dollar. For example, I once had a client that was going through some things medically who was going to have over $30,000 in out-of-pocket medical expenses that would not be covered by her insurance. So what we did was we set up something called a health reimbursement arrangement, or HRA, through her business, which is a specific arrangement approved by the IRS that allows the business to reimburse for employees' medical expenses. Now, to be fair, HRAs require a more complex entity setup, so it's also worth mentioning a popular alternative to setting up an arrangement like this, and that is through setting up an HSA or health savings account instead, or you can do both. But with an HSA, you can get a deduction for simply saving money for your future health expenses. And when you use the account for those expenses as they come up, those funds also come out tax-free. So it's almost as if you're writing off your health expenses when you use this type of savings account, and they are also pretty easy to set up if you have a high deductible health insurance plan. So when it comes to writing off your medical expenses, you have options. Plus, one that surprises a lot of my clients anyway, is the ability to write off your health insurance premiums as well. I have so many clients who pay for their own health insurance premiums that are completely unaware that they can write off those premiums on their taxes. And not only can it include premiums for your own coverage, but it can also include premiums you pay for your spouse and your dependents as well. All of this is tax deductible with the self-employed health insurance deduction, but most people do not know about it. And for this reason, I often recommend that my clients pay these expenses directly through their business or reimburse themselves from their business to make sure that these expenses are captured and recognized on their books so their accountant does not miss it at tax time. Anyway, just comment health to learn more about any of these deductions, and I will create content on this if there is enough interest. Now let's talk about a few other major expenses most people have, like their own dependents, like their kids, or even their parents. This is another shocker for most people I talk to, because most people support their dependents with after-tax dollars that are not usually deductible when they file their taxes. But what if we could use pre-tax dollars or deduct these expenses that we have for these individuals on our taxes? Well, you can in a couple of unique ways. For one, you could hire your dependents as employees in your trade or business, because when you give them a job, payments to them become tax deductible under your business. So now you're getting a tax deduction while still providing financial support to your dependents at the same time. So this is usually a win-win scenario, especially when we consider the fact that they may be in a much lower tax bracket than you, or owe no tax at all on the payment depending on the circumstances. But that may not be an option for everyone. So let's talk about another little known trick that we use here at our firm, which is number 2, setting up a dependent care assistance plan. Now, this is an IRS approved benefit plan that allows your business to reimburse your employees for childcare or elderly care expenses they may have up to a certain limit each year. And what happens is that when your business submits this reimbursement, that reimbursement is tax deductible for the business and also tax free to the recipient under IRS rules if set up correctly. So if you have children, elderly parents, or dependents that you financially support in any way, you might want to consider ways where you might be able to use your business to write off some of the support you provide in a compliant way. But beyond this, some of my clients have other large expenses that might be connected to their own children or even themselves personally, like education expenses, for example. And if you are wondering, yes, even these expenses can be tax deductible through your business under the right set of circumstances. So let's talk about it. First, you have to understand that the IRS recognizes that in order for you to run a successful trade or business, it typically requires skills, training, and education. So naturally, things like courses, seminars, conferences, trade publications, and even books you purchase that are related to your business are tax deductible. The key is that the expense must relate to skills that are required to operate your trade or business. But in addition to that, a lot of people don't realize that this can also apply to expenses tied to higher education as well, like diplomas, degrees, certification, licenses, and other professional requirements. Those expenses can be 100% tax deductible for items that are directly related and necessary for your business. So if you or your employees, which can even be your family members if they are employed in the business, but if they have educational expenses, there may be ways for you to write off a portion of those expenses through your business legitimately, depending on the circumstances. There are also things like educational assistance benefit plans that you may be able to set up through your business, which would reimburse your employees for some of their educational expenses. And those reimbursements would also be tax deductible for the business. Anyway, if you're still watching this, I just walked you through how to write off almost every major expense that most people have. From everyday expenses like your housing, your travel, and your meals, to major expenses like your medical expenses, childcare expenses, or education expenses. If you have a business and a business purpose, there is probably a way to write it off on your taxes. And if your CPA is not helping you with things like this or finding every deduction available to you, just apply to work with my team today at mycpacoach.com.